Hey everyone, Paul Clark here, and grab your popcorn because today we're going to be diving into why AMC fell over 10% today. In fact, they fell over 13% to end the day at $3.54. They have slightly recovered in the aftermarket, but certainly the stock was pummeled. And why did they fall so much? Well, the company actually came out and they gave guidance that they do not know if they're going to have enough cash to sustain their operations through the end of the year. They don't know if they have enough cash to survive 2020, okay? Now that's actually pretty significant too, because they recently announced that when Cineworld, within the last, week or so, they came out and said, hey, we're gonna, shut down our operations. That's how we think we're gonna be able to best survive. And that was in big response to a lot of movie studios pushing some big movie releases back. So essentially they were saying, look, if the movie studios aren't going to play along, they're not going to help support our business, the best we can do is shut down until we can actually, get to the point where they're going to start releasing big blockbuster titles again. AMC stood out in stark contrast and said, nope, we're going to keep our movie theaters open, really regardless of what happens, which was, again, a pretty bold statement, and especially comes to light, it's even bolder when you're saying that you're running out of cash or you don't have enough cash to go the rest of the year. So let's think about that. So right now, they actually, in the U.S., they've got operations, in many countries, but in the U.S., AMC has 598 theaters. They've actually currently opened up over 80% of those theaters. One of the biggest problems on AMC is that some of the theaters that remain closed are in the New York and the California markets. Well, the California and the New York movie theaters actually account for pretty close to about a quarter of their business. So that continues to be a big drag, even though they do have over 82% of their theaters open. Now, when we kind of continue to look into this, when they say that they're going to run out of cash, let's put that in perspective. They ended at the end of their most recent quarter that was reported. So at the end of June 2020, they had close to $500 million in cash on their balance sheet. They had $498 million in cash and short-term investments. Okay, well, if we look at the number of days between the end of June, so June 30th to 12/31, there's 184 days. And we divide the 498 million by the 184 days, we find out that their cash burn is about $2.7 million a day. Now, I did that math ahead of time, okay, so in case you're wondering. But that being said, that's a pretty big number, 2.7 million dollars a day that they're burning through cash. Now, and that's a bit of an oversimplification, because when we really think about this, you would have to think about net financing. You have to think about, hey, since that time, I think they've actually made some strides in either raising additional funds. They made some strides in maybe selling some assets. So saying that they're burning through 2.7 million a day, or projected to, if they truly are going to run out of cash by the end of the year, is a pretty conservative number. Okay, and again, keeping in mind that they're saying that they're going to run out of cash, they're keeping their businesses open, no blockbuster movies coming out, and on top of that, so right now, really what you have is that there's almost this voluntary capacity constraint where customers aren't really flocking back to theaters, okay? And what you might have on top of that, to add even more insult to injury, there's the potential that there could be, the same circumstances that got them into the mess in Q1 and Q2 could be resurfacing when you look into Q4, when we kind of head into the winter months, which would even further, impact their ability to be able to remain a viable business. Now, I understand that movie theaters are not cruise ships and they're not related to that industry, but I want to kind of, draw some parallels there, because to me, it's really intriguing that when you look at a lot of stocks and businesses that are actually involved in the cruise sector, the cruise industry, a lot of those companies have been able to raise financing, whether it was through debt or through private placements, through equity. They've been able to raise funds, from the cruise industry perspective, where, you look at a lot of companies, like I just had a video I posted on One Spa World, where their management's actually offering guidance that they have enough liquidity where they can survive all of 2021 without any meaningful revenue. So not just survive 2020, they can survive all 2020 and all of 2021 if shutdowns kind of remain, or they're not generating any meaningful business. That's a huge statement. And why is that? Well, I think the big reason for that is when you look at the long-term economics of the cruise industry, I think they make sense for people to say, or investors to say, hey, we understand that this pain is going to be short-term, it's going to be temporary, relatively temporary, and that eventually we're going to say, we're going to get back to the long-term growth that we were already seeing in the cruise industry. And we know that the cruise consumer, that's a very, lucrative demographic to go after. So it makes sense to say that they want to support that because they know on the other side there's going to be some strength there and they can partake in that strength. Now, when we compare again back to movie theaters, movie theaters have been under a lot of pressure. People have been consuming more content at home. There have been a lot of movie studios saying that they want to monetize their content in their own way. Disney actually just yesterday came out and said that they want to really kind of reorganize their company to focus on streaming as the primary way that they're, generating their profit, generating their sales. Of course, they have Disney Plus that they've been able to use, and even AMC themselves. So AMC used to have with Universal a 75-day window where movies were in AMC theaters, but the studios have been showing such leverage in negotiations that they were able to recently get that down to I think it was 17 days. Some other crazy numbers to throw at you. So when you look at Q2, so the most recently completed quarter for AMC, Q2 2019, they in sales, in revenue, they had generated over $1,500 million of revenue, which is the equivalent of 1.5 billion. I feel like it has a little bit more effect if you say over 1,500 million. Either way, it's a big number, okay? What did they generate in Q2? And I understand, there's a lot of reasons for them to generate this number, but in Q2 2020, they generated $19 million in sales. Again, so they went from over 1.5 billion to 19 million in 1 year. I mean, that's insane. I mean, that's essentially zero for what they're doing, okay? That's the revenue side, but what about the net loss so far? Well, so far, between Q1 and Q2 in 2020, AMC has actually posted a loss of over $2.7 billion. Again, that's huge. So what is my kind of take on this? What's my commentary? My thing is that when I'm going to be investing in companies, I want to be able to say that I like the long-term growth prospects of the company I'm investing in. I don't think that just saying because something's cheap, that is a reason alone to say that you want to buy it. Okay. So I think in this case, if you actually really ask yourself, don't focus on the price and say, is a movie theater, is that something that you think is actually going to be a growing business in the next 5, 10, 15, 20 years, whatever your long-term horizon is? And for me and my money, I'm going to say that that is not going to be a winning business. Again, if you want to invest in studios and streaming, things like that, again, for me, I would be far more interested on the news to say that, with Disney recognizing that they can, really primarily focus on streaming, I think that that's something I'm really excited about. I'm pretty excited about what Lionsgate's doing. They have Stars, and they're starting to leverage more and more of their content. They've kind of even come out and said with Lionsgate that they want to be able to pursue deals. If they can shorten time in theaters, if they can move things faster to streaming, and they can kind of get a bigger piece of the pie, that'd be advantageous to them. So that's kind of where my head's at. I just wanted to kind of bring you up to speed, so let me know what you guys think. You think if they're going to survive? You think if they're going to be able to raise enough funds? Are they truly going to keep their theaters open? Let me know what you guys think in the comments below. Thanks for watching.